All right. So, by the way, for the audience, your granny shot, it's kind of like almost a very easy shot. You think it's almost a no-brainer when it comes to that stock, right?
That's right. I think investors should look at it as a core portfolio holding. The granny shots is basically a thematic portfolio that buys the strongest stocks in a specific theme. So when you think of AI and millennials, Apple and Nvidia and Tesla, I mean, they're really at the center of that.
All right. But your sector picks when it comes to the AI trader, Nvidia, Cadence, ARM, AMD. Why isn't Apple in there if you believe that it's a core holding and obviously they're pushing into the AI space?
Well, mainly because Apple is much more than just an AI company. So I don't think it's intentional that we left out Apple when we talk about AI trades. But when our clients are looking for direct beta exposure, to them, the complex is Nvidia, and then stocks with high correlations to Nvidia, which are the ones that we actually listed.
That was Tom Lee, the managing partner and head of research at Fundstrat, talking about his no-brainer stocks to own. And of course, Nvidia Stock made it into the list. The stock is up more than 150% year to date, showcasing the company's dominant position in the AI boom. So it's no surprise that big names on Wall Street are extremely bullish on Nvidia. Recently, Nvidia saw its price target increased by TD Cowen to $140, up from the previous $120, with the firm maintaining its buy rating on the stock. As of the time of this video, this price target implies an upside of around 16%. So, we're going to talk about why the investment bank is bullish on Nvidia, as well as its new earnings estimates for the company. Additionally, we'll go over 3 things every Nvidia stock investor must know before they decide to buy or sell Nvidia shares. So, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You're also buying into Nvidia, which was around 120 today after the stock split. Tell me a little bit, I mean, do you think it has more upside potential? Because there are people who do think it's overvalued, there is competition. And the question I asked earlier today was, okay, maybe it won't go up 900% like it did, but are you worried that it drops down below 100 and really crushes people? What's your view here?
Well, I think ultimately things that go up ultimately do go down. And so that's real. But here's reality. AI is what we are rallying on in this market. And NVIDIA is the supreme chip leader. And so there's 2 things that happen when we do a share price split like this. The first thing that happens is the perception of value increases. If you could own 1 share for $1,200 previously, now it's $120. I can own 10 shares now for that same $1,200. That seems like more value in your account for doing it. And then the second part of this is more importantly, and that is that because it goes down to 120, people look at NVIDIA's price history and they go, oh my goodness, it's been at 120 before and it grew to 1,200. It's going to definitely go up from here. So they're going to rally back in to NVIDIA at that point in time. So yeah, there's a ton of competition right now in AI and in these chip makers. We do think NVIDIA is positioned really well, although there's a lot of competition that's coming out here.
According to TD Cowen, the revised Nvidia stock price target reflects the updated earnings per share estimates that now account for the stock split. The investment bank's analysis also includes insights from a comprehensive report called The Next Data Center Decade, which explores the future framework of data center operations. But aside from the buy rating and the bullish price target, TD Cowen cited Nvidia stock as a best idea, and this shows just how confident TD Cowen is in Nvidia's continued growth and future, particularly in the data center sector, which is expected to expand over the next decade. Indeed, the global data center market, which is expected to increase to a valuation of $622 billion by 2030, from $301 billion in 2023. And since Nvidia already dominates the market for AI chips, it'll easily grab a big slice off this rapidly growing market. In addition to TD Cowen, other investment banking firms raised their price targets on Nvidia stock. For example, Evercore raised its price target from $116 to $131 and gave the company an outperform rating, while Cantor Fitzgerald set a price target of $140. But why are so many firms still bullish on Nvidia stock after its amazing run? Let's find out by looking at 3 things every Nvidia stock investor must know before making any decision regarding their Nvidia shares. Hello everyone, and welcome back to Investocracy.
There have been a number of papers recently written about whether Nvidia is a bubble, at what point it could be a bubble, at what point it could fuel a bubble in other big tech shares. A lot of people making the counter argument that it's actually generating boatloads of cash, so it's not really bubble-icious. How do you understand, what's your parameters of really gauging when enthusiasm has gone beyond the realm of possible and likely for a company that seems to be going through the moon, shooting for the moon, but it can't continue forever?
Yeah, I think 2 key things to watch. I mean, if you look at AI penetration in the server side, it's still less than 10%. It's still about 10% of the market. So there's still long ways to go in terms of AI adoption, not just at the cloud, CSP level, not at the hyperscale level, but back into enterprise and in a lot of other markets. So there's a long ways to go in that adoption. Number 2, when you look at the whole AI market, it's almost a 1 trillion market today, and about 250 billion of that is, you'll see about 250 billion a year of basically brown scale investment, basically upgrading existing infrastructure, an additional 250 billion of new AI investments. So that's about 500 billion a year of AI investments that are going to come through. And I would say also, don't forget, when you look at NVIDIA itself, number 3, I would say, what they're selling today is Blackwell. That's only a $50,000 ASP product on an 8 GPU server. They are going to full stack servers in 2025, where the ASPs or the selling price of these servers are in the 1.5 to 3 million. So a very significant increase in their selling prices, and that'd be a big driver for the top line. So there's a long ways to go on this story. So
Nvidia's stock split was something that many investors were eagerly waiting for, as it significantly brought down the stock price. Nvidia shares had soared in recent times, climbing nearly 600% in just 3 years. And this happened thanks to Nvidia successfully shifting from mainly serving gaming customers with its chips to using these chips for developing AI applications, which sent the company to the forefront in the world of AI. Back to the split, it's seen by many experts as a positive move because it makes the stock more accessible for a broader range of investors. In fact, Nvidia even said this was its motive for the split, to make it easier for employees and shareholders to invest. So you don't have to spend more than $1,000 or buy fractional shares to open a position in Nvidia or add a small amount to your existing position. But this doesn't make Nvidia cheaper than it was before the split. This is because the stock is still trading for around 44 times forward earnings estimates, thanks to the fact that the split acts on individual share price through the issuance of more shares, but it doesn't change anything fundamental about the particular company and stock. Additionally, the market value of the company and the value of an investor's holding remain unchanged. Therefore, investors should know that splits don't really act as catalysts for stock movement because they're just technical moves. However, it's still interesting to look back at how Nvidia stock performed following its past 3 stock splits in 2006, 2007, and 2021. And in each case, the shares actually declined or stagnated in the months following the split. Does this mean the same thing will happen this time around? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
As you're sort of weighing these 2 stories, and Angelo, I'll start with you on this one. Apple or Nvidia, if you're choosing one to add to right now?
Yeah, I mean, for us, it's still Nvidia. I mean, that's really going to continue to be the major driver in terms of AI monetization here over the next 3 to 5 years. I don't think there's really much doubt in that when you kind of compare the 2 stories here. Obviously, you're paying a little bit more for NVIDIA, but really not much more when you kind of look at some of the multiples that are out there for both companies. So as far as kind of the content growth story is for NVIDIA, as you kind of move to Blackwell here, as well as kind of their ongoing shift towards more kind of total system sales out there. So not only the GPU, but also the CPU, the networking chips out there, as well as kind of the broadening of the kind of the customer market out there. Really, just over the last couple 15, 18 months, it's largely been focused on the cloud side of things. You're going to get more kind of enterprise adoption, as well as kind of greater sovereign AI opportunities out there. So we remain very excited, even with this massive move that you've seen from NVIDIA here over the next 15 to 18 months, that it likely will outperform Apple here over the next 3 years or so.
If you're an NVIDIA investor, then you probably would be happy to know that just because NVIDIA stock stagnated right after its previous splits, it doesn't mean that it'll do that again, as it's important to keep the economic context or other factors that might have affected the stock's performance in mind. For example, when the company split in 2007, the general market was heading into bear territory. Finally, during all three occasions, NVIDIA's earnings picture was different from its earnings picture today. Then the gaming industry was a key customer, and today, the main customers are in the high-growth area of AI. It's possible that NVIDIA shares may trade at a lower price during the slower summer months, or in the absence of any major news ahead of the Blackwell launch this year. But if this happens, it won't be because of the stock split. Companies generally launch stock splits after periods of strong success. For NVIDIA in particular, earnings have been on the rise, and that's pushed the stock higher too. In the case of many recent stock splits, especially in the tech world, this particular stock has reached prices that put it out of reach for many investors, which is the level of $1,000, and this price might be seen as a psychological barrier for some investors. For example, Amazon has a stock split in 2022 after its shares soared above $3,000. So, when a company announces a split, that company usually has been doing pretty well when it comes to earnings and share performance. But the announcement also suggests the company, in this case NVIDIA, could continue to excel. Management is optimistic that the stock, from its new price, has what it takes to again climb significantly higher. And a lower per share price offers it room to run because more investors are able to more easily buy the stock. Meaning, these are amazing times for NVIDIA, and considering the extremely high demand for its products, which is so incredible that CEO Jensen Huang said the company can't keep up, these amazing times could keep on rolling for the long term. We thought that NVIDIA stock was a buy before the stock split was even announced, and this view remains unchanged. Whether the stock continues to soar or dips as it did following previous stock splits, that's okay, because NVIDIA has the innovation and market dominance that can keep boosting earnings, and in turn, the stock price. But what do you think about NVIDIA stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for NVIDIA is. If you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.